We got a big Bank of Canada cut in this morning. Projections were somewhere between 25 to 75 basis points, and midway with the highest probability got it right at a 50 basis point cut, taking our Bank of Canada rate down to 3.75%. Note the peak was at 5% earlier this year. After this, mortgage variable rates are going to come down closer to 5%. So what this does is it will narrow the spread between fixed rates, which is currently at 4%. Now, analysts are expecting Bank of Canada rates to come down more into mid-2025. And so by then, we're looking at mid-twos. So there is a better argument to go variable these days. We wanted to be more objective, so we ran the numbers using the forecasted rates. And it looks like the 3-year average variable rate could land around 3.85%, which isn't actually too far off from the current 3-year fixed at 4%. But it does have the added variable risk. But it also depends on who you believe. If you look at RBC's predictions, it could be more compelling to go variable at this point because the discount is better. So what's going on? Why is Bank of Canada cutting rates so aggressively? Well, Bank of Canada isn't worried about high inflation anymore, as you can guess, but rather that inflation doesn't hit their target between 2 to 3%. Right now it is sitting at 1.6%, which is lower than that. And then it's also really still only propped up by shelter overall. Just look at mortgage interest inflation. It's still at 17%. And then if you look at the monthly data, which is less delayed than the annual side, but might have the seasonality aspect, we're actually in deflation territory. We know interest rates are related to real estate, and that's why we're talking about all of this, but not just on prices, rents as well. And when you plot rates against prices and rents, you will see a clear pattern. Higher rates tend to push people to rent more, driving up rents, and landlords end up pushing rents even higher to cover their higher borrowing rates, while house prices often dip because higher rates mean that prices need to come down just to be just as affordable. Now, when interest rates fall, the opposite could happen. We've already seen rents start to fall, but they can come down even more. And we'll also see more real estate investment at this point, which will add to the rental stock, which can take rents even lower. For real estate investors, we end up balancing lower rents with lower borrowing costs, so the impact isn't as bad here. On the upside, affordability eventually improves more, which could take prices higher. Just as a disclaimer, this is not a crystal ball. These are just observations based on past trends and fundamentals. Now, what we do know right now is that it definitely is a buyer's market in Toronto real estate. With falling interest rates, the side that gets the most excited first are sellers, and that's why we saw a 44% jump in new listings just last month in September. And as you can see, buyers aren't rushing in yet. Now, when you break down the Toronto real estate market a bit more, you can see that freehold and condo trends are actually pretty different. Condos always face more supply, and there's a lot more expected in terms of condo completions between 2024 and 2026, so this can keep prices on the condo side more stagnant. This isn't the case for freeholds, and they seem to be quietly recovering since 2023, and we suspect that there is a better chance here for houses to pick up into 2025 as rates continue to fall further. Right now, in the fall of 2024, we're at a point where prices are lower, interest rates are lower, and the ball is in your court as a buyer, so you are in a great position to benefit if you enter the market today. And if you want to make better fact-based real estate investing decisions, our team is here to help you on this front. Our real estate sales brokerage focuses on multiplexes in Toronto. Whether you're looking for a property that's ready to rent out or you're looking for a house that can be converted into multiple units, we can help you make better numbers-based decisions. Here's how it's like to work with us. We'll take the time to understand your goals, help you find great investment properties using numbers, and eventually assist you to buy the option that fits you best. If you need renovations, we can connect you to trusted contractors as you manage your project, and we'll be around to coach you along the way too. Once it's done, we can lease and manage the property for you too. So if you're ready to get started, just head over to this link here and let's chat.